If you were to create the best global scale reserve asset, what would it look like?
The AVM is everything. It is the innovation that lies at the core of this, and there's many faces that it could take. There's many shapes and forms, and I really don't think we've quite even scratched the surface with the kind of stuff that could live on top of it.
A true store of value is something that you can sell and the price doesn't go down at all. If somebody wants one of these tokens, they have to pay for it. Every token that exists, every unit, every share exists because somebody bought it. They wanted it enough to pay for it.
Now, it's a pretty brilliant concept, one that didn't exist before.
If you buy it at the floor, it is guaranteed to outperform the underlying.
I can borrow to exit, interest-free, liquidation-free lending. Like, this is brilliant.
It's reminiscent of the decentralization dream, the dream that no individual has any say about what you have. Now no individual has any say about what you have is worth.
I want to go back a little bit to before Nirvana for you. Like, who are you? What were you doing beforehand? And what got you to make the change from Web 2 to Web 3? What was that moment for you?
Yeah,
but more importantly, who are you?
Who am I? Well, let me just talk about it like a resume. That I studied math and music in college. I went and got an advanced degree in comp sci. Worked my way up to becoming a software engineer at Google, and then about 2020 or so, caught the bug with crypto, and thought to myself, I understand programming, I understand numbers, I can make a dent in this paradigm shift that's going on. And as I started exploring what has been solved in crypto, where it is today, where it needs to go, I realized that there was something which was left out of all the innovation, which was the problem of token value itself. And after becoming aware of this gap in the crypto project, I became obsessed with this idea of how can we have the same guarantees around the value of a digital asset that we have around the ledger with
the
Bitcoin.
Ownership. Yeah.
It became this all-consuming project to try to solve the problem of value itself in line with crypto's principles. And that was when I began working on Nirvana.
Beautiful.
How about yourself? You've been on quite an adventure in this space.
I started off with education. I set out as a young adult saying, I just want to inspire people. The salaries were secured. It was a nice way to kind of enter the job market. And really the key was just to inspire people. I was inspired by my teacher at one point in my life, and I thought, this feels good. I want to do that. And I got into that. And then, when you extrapolate that, like, why do you want to inspire people? It's like, well, I want to change the world. I want to be a part of a positive change. And if I can just focus on that at the individual level, great. But my mind started to wander, like, how could I do more with that? And it occurred to me very quickly that you can't do a whole lot when you have a 9-to-5 job, particularly the one like teaching. You're 9-to-5 at school, but then you're back home marking and planning, and you're tired. You're not going to extend that change directly yourself. And at that point in my life, I discovered crypto through a podcast I listened to with Joe Rogan and Andreas Antonopoulos. Shout out to Bitcoin Jesus. And so got into it, started a fund in 2018 after having some success during ICO season, found a group of like-minded individuals who were like, hey, let's get together and really invest in a project and put our energy into it and see, what teams we can work with. And again, extending that idea of like, can we change the world? And when I found Nirvana, well, I didn't find it, my co-founder found it, and he's our gem hunter. He's the guy who's like, guys, I think I got something. This one's big, it's really interesting. And so when I dug into it, it just had this moment. I was like, that's it. It was really hard to look away. And so when I found Nirvana, and it was kind of like, wow, I hold, you hold, number go up, I can borrow to exit, interest-free, liquidation-free lending. Like, this is brilliant. And just purely through that lens of like on steroids. I thought that was my initial intuition with it, was like, okay, so this is the next version of something that was fantastically beneficial for a lot of people back in 2021 from a purely like growth perspective. And that was my initial inspiration. And then when I met you, and I was like, okay, so you have the same vibe where you want to really think big about the deeper problems in value and crypto and all that. And that all rang true to me. And here I am.
Here we are.
Here we are. I'm be honest with you, Nirvana is a little weird. It's different than everything. Where did you start with that? You're sitting down one day and you're like, this is all not quite right. I'm going to try doing it the other way. Like what got in your head to go this path? It's not been done before just this way. The first, what got you there? What was your spark?
It is kind of like, how can you just turn everything upside down?
Yeah.
This needs fixing, that needs fixing. It seems like it's the upside down world for crypto, but I swear it's what I thought crypto was supposed to be. I remember this feeling of learning about Ethereum and smart contracts and decentralization, and you don't need humans anymore. You'll just let code be law. And I got very excited about that idea. And 4 or 5 years ago, when I finally decided to break in and get involved, going to a conference and seeing just how old-fashioned everything was disillusioning in the literal sense of it. It was this feeling of like, wait a minute, this is all just the exact same traditional, conventional financial playbook, just done faster and 24/7.
Mm-hmm.
The thought was, this is not the crypto that I was told about. And it's a good idea, it's a good dream. That dream being very much a reaction to conventional finance. I mean, that's what Bitcoin grew out of, was looking at these shadowy rooms on the 42nd floor in Manhattan and thinking, we need to open up all of this, make it transparent, make it automatic, let's do something better and different. And so Nirvana, ironically, I think is more true to crypto's roots. It takes all its cues from the Bitcoin project. It just doesn't sit tidily where crypto has gotten to in the last 15 years.
Yeah, and it presents a number of its own challenges that I've run into, which is you talk to a marketing agency, you talk to a project founder, they say, there's this playbook, right? I'm going to raise money. You got to have money to start your startup, to take your idea and turn it into something. And so you print 1 billion tokens on paper. You don't even mint them yet. You just say, hey, we're going to have 1 billion. You know the pie charts. The 20% is going to go here, and 10% is going to go here, and we're going to have airdrops, and we're going to run the incentives. And that's the paradigm right now. And that is the thing you need to do if you want to raise money and then attract users. And what you get is this window dressing of metrics, and you say, hey, I think lighter perp stacks right now, I haven't used it, but it's getting a ton of volume, a ton of noise. They're giving out a ton of points, and presumably those will turn into airdrops. And before the 1010 crash, there was actually a lot of people even on 1x and 2x leverage on lighter that I heard about that, they get wiped out. They were just there to farm the points. Anyway, point aside, when you start with zero, which Nirvana did, you say there's no supply. If you want some, you have to come, bring your dollars, and assign value to this new token you're going to mint. That's the upside down world that you're talking about, where there was no pre-mine, where here's 1 billion, and we're just going to find a way to assign value to it. And then if the hope is drive value to it, drive demand, cap supply, play that game. And so I brought it up. It flies in the face of the current paradigm, like you said, what has become. And it's not the only one. There's some new POW chains that start at zero, turn on your machines, you can mine the coins, directly taking after Bitcoin, various levels of programmability and new things. But this idea of like there's no value until someone brings value to it. It's a really nice ground up kind of reimagining of, and it presents its own challenges. You don't have airdrops.
Yeah.
But are airdrop farmers the users that you want? Do they stick around long term? Data says no.
Here's the thing. I think the lingo kind of muddies the water. There are crypto companies and there are crypto protocols. And there just are not that many protocols at the end of the day. Bitcoin's a protocol. Just here's the code, here's how it works. It's not a company. It's just something which is open, enduring, it runs by its own rules, and that's it. Virtually everything else that takes up space in crypto's imagination, the stuff that makes headlines, are companies. Things like Binance has a token.
Yeah.
It's clearly not a protocol, even though they have a token. And yet we call things on DeFi protocols, but by and large,
projects.
they're not that much different than Binance. There's a staff, they have payroll, they have budgets to spend on this and that, and like you said, there's this path dependency where you got to have money to pay for all these people, to pay for all this infrastructure. And if they were to put out a token, as a company like Binance did, it doesn't make it, it's not crypto with a capital C. It's just a company that's using crypto technology to do traditional company things. And so maybe one of the reasons Nirvana looks odd at first is that it's one of precious few protocols that emerge, a genuine, authentic protocol, not operating as a company, but something which just exists.
Built around the AVM, which I want to unpack a little bit, because there's one thing that I really locked into when I started working with you, is that the AVM is everything. It is the innovation that lies at the core of this, and there's many faces that it could take. There's many shapes and forms. There's a lot of things that could come from that. And I really don't think we've quite even scratched the surface with the kind of stuff that could live on top of it. And you've got the SaaS layer built out now. You've got 5 different teams that have either built to it or are building to it. Talk about the AVM, the assured value machine. Like, this smart bonding curve is what I've really zeroed in on with it when I speak with people, and just to kind of help wrap their heads around it, reallocating liquidity, all happening automatically. Math just is math. It works.
Yeah.
No matter how many zeros you add to the number,
It picks up where Bitcoin left off. I'm thinking back to that earlier question of what inspired all of this. Seeing people lose money, hand over fist.
Or losing money,
Yeah. Just seeing the roller coaster of euphoria and then panic, and having a friend who's maybe riding high one day and then the next month, had the rug pulled out from underneath them. That felt to me like this is not the path crypto was supposed to be on. The idea that Bitcoin could be something like a reserve currency for the world, something that you can safely, securely keep value stored inside of and
transfer.
Use and transfer as a unit of account. Back in the day, crypto used to mean cryptocurrency. We don't really say that much anymore. It's been kind of a subtle shift over the last 5 years.
Web3.
Own, rather than read or write. And crypto has succeeded with the Web3. It just hasn't succeeded with the value proposition. Web3 being the extension of Web 1 is that you can read. You can visit a bulletin board in 1992, and Web 2 is that you can read and write. You can post and tweet and have a MySpace page. And the Web 3 is that you can read, write, and then own. You aren't beholden to MySpace.com's server farm to keep your content. Like, you own it yourself. Crypto has solved ownership, but ownership is just a ledger. All crypto's really accomplished at that base layer, it hasn't been store of value, it's just store of numbers. That's what a ledger is. And that's not a bad thing. That what the Bitcoin project explicitly set out to do is, how can we have a ledger which keeps track of everybody's balances, and you can't double spend. You can't corrupt it. Nobody can get in between you and who you want to send something to you. It's a ledger that you own. But that is just store of numbers. And by and large, any other blockchain that exists is focused intently on that problem. Just how can you make sure that a state-level actor can't mess with what you own? Mm-hmm. The next logical question is, what is what you own worth? What is it worth? You own this.
It's worth what someone's willing to pay for it.
Yes.
And there's more people willing to pay on certain days than others. Liquidity moves, Monday to Friday is different than Saturday and Sunday.
Yeah. So the assured value machine is to have it's in the name, there's a machine which tells you what it's worth. Ordinarily, what something's worth is what another human is going to buy it from you for. And if you keep pulling on the thread, you're going to find a buyer who walks around in flesh and blood at the other end of it. How can you take the same guarantees that crypto applies to numbers and apply it to value? How can you make something's worth be programmatic with the same level of consistency and reliability and impossibility for corruption that you have with the ledger? What an AVM token is worth is what the machine is willing to buy it for. And the machine doesn't sleep, doesn't grow tired, doesn't get emotional, doesn't panic.
It's predictable.
Doesn't take a weekend off. It's predictable. And it's right there in the code. We have succeeded at engineering databases, ledgers. The AVM, when I say it picks up where Bitcoin left off, it's like, okay, can we move the horizon a little further and engineer value for things?
And liquidity.
Yeah.
Like programmatic. And that's the piece I think is really interesting, where you don't see it, you don't see panic as much in the chart when I look at price action of the assets that are built on the AVM, because there is a predictability to it. So that you don't have this question where it's like, oh man, this thing just dropped 60%. It might drop 60% again tomorrow. I don't know who's out there who's holding it. I'm looking on chain, I'm checking Arkham's holder profile. Oh my God, somebody just moved 3,000 Bitcoin to Coinbase. But the psychology really shifts in a holder profile when you have something like the AVM backing it, where it's kind of like, well, I can go to sleep tonight because I know there's a minimum value. There's my worst case. It works the other way too, which I think is really nice, where if you want to buy it, it's very easy to predict what it's going to cost you, how much you want to buy. It works both ways. And yeah, I like the idea of moving back to code and math.
Yeah, to me, that is the point of crypto. If crypto deserves to exist at all, it should meaningfully be different than what we have conventionally, traditionally. Yeah. Crypto doesn't matter unless it's different. And the difference can only come from one thing, which is things operate by algorithms.
Yeah.
That's the entire premise, is rather than let a boardroom make decisions about your money, your property, can you have an algorithm function the same way today, tomorrow, next year, 100 years from now, and there's no boardroom on earth that can do anything about it? That's the entire goal. And so when you talk about the price discovery, the liquidity levels, just what it means to buy and what that's going to do to the price, who you're buying from, all the AVM is doing is making it so that the counterparty to whenever you're engaged in a transaction isn't another person, it's an algorithm. It's just taking that idea, can you replace humans with algorithms, and it's applying that to the market.
Well, in a new way, like that hasn't been done with smart contracts, because you can't do this without smart contracts.
You cannot.
That's the whole thing. And I still remember when Ethereum launched, and there wasn't a lot built on it. The ERC20 standard came out and the tokens were launched. There wasn't a lot to do with them. Uniswap, Ether Delta were some of the earlier examples of things that you could finally do. Simple transfer, buy, sell. But I remember feeling really excited back then, because I was like, oh, just imagine like the plethora of things that will be built with this. And there has been a lot of new things built. So I don't want to get into this mindset of like, there's no innovation. But we hit a wall at some point, I feel like a couple years ago, where a new chain comes out and very quickly, the DEX moves in, a couple NFTs launch, the meme coin launcher comes in. And so you have the same kind of repeat copy paste plumbing on each chain. And there's a lot of, various twists on some of these core primitives. But nothing too groundbreaking yet, nothing quite like this. And that's a big reason why I joined the team, is like, this was the first thing that I saw. I was like, damn, that really is a new paradigm kind of shift where it's like, we're going to actually code away from the human stuff. Because like you said earlier, if you just create the same stuff and the humans run it, it's going to be run the same way. We're not going to change. Buy, sell, move down, move up, Forex markets 2.0, sweep, 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 extract. It's hyper efficient, and it's just getting moved into this new place. So
Uniswap is a great example that there have been enormous innovations. There have been the landmark exemplifications of what crypto can be, which in the case of Uniswap is how can you make a market structure be an algorithm. You can fit the basic algorithm for Uniswap on a note card, and that's it. And so you know that when you're trading against a market, there's not this enormous edifice. I don't think there's a person at Robinhood who fully understands how everything works, the life of a dollar flowing through their system. And Uniswap finds a way to crystallize all that in just a few hundred lines of code. That's all you need to know when you're trading. It's very, very, very cool. All Nirvana is doing at the end of the day, all the AVM is doing, is taking that principle and just applying it to a new problem. And the problem is value itself. How can you have something that transparent, that solid, that easy to understand, but apply it to value? Uniswap, for instance, it doesn't deal with the value problem. It deals with how do you match a buyer to a seller with an intermediary of a market maker. It's a very gnarly problem, and that's a very elegant solution. But why is this asset traded on Uniswap worth $5 today and 50 cents tomorrow? Good question. You're not going to find that answer in Uniswap. The value of things on there is still old-fashioned finance. It hasn't been cryptoified. The AVM is just cryptoifying value itself.
Well, and it stays dependent on human LPs.
Yeah.
Right? And there's locked LPs, and there's some variations on that as well. But generally speaking, liquidity today does not guarantee liquidity tomorrow.
Yeah.
And that's an uncomfortable fact that I think everyone in the world is just comfortable with. Like, it's an uncomfortable fact of life. It's gravity as far as we're concerned at this point. That's just the way assets work. And I think that's where friction and understanding come from, because it's not how assets have to work. But no one's built an AVM before. Here's my question for you. Why do you think no one's built this before? If you're so great, if this idea is so fantastic, why has no one ever done it?
There's not a lot of upside to whoever builds it. That's it. I think just an ordinary person faced with the option between I can start a foundation, I'm going to create this new blockchain, I'm going to call it Ethereum. I'm not picking on them for any particular reason other than everyone knows Ethereum. And you see that there's some value in what you're going to spend the next 3 years of your life engineering and slaving away at, and so you want to pay yourself.
Yeah.
The easiest way to pay yourself is the way that, ironically, it's what Bitcoin was revolting against, which is you have your finger on the money printer. Yeah. If a historian were to say, virtually every country that's ever existed, every sovereign state, once they figure out that they can print their own currency, they sort of just can't help themselves. And dilution, inflation is what dooms the national economy, because that Pandora's box is right there. The AVM, because it is programming value, precludes right out of the gate the ability for a human to, in a moment of greed or weakness, give themselves value. The rules of the algorithm stop that dead in its tracks. The AVM's motto is, if somebody wants one of these tokens, they have to pay for it.
Yeah.
Every token that exists, every unit, every share exists because somebody bought it. They wanted it enough to pay for it. Nothing out of thin air.
I can see why that's not very fun for someone to build. Back to this
hypothetical person behind door number one.
Yeah.
And this is the great problem with crypto. It almost makes digital assets kind of oxymoronic when you think about it. The whole idea of digital is that you can make as many copies as you want. You can. It's just as easy to push a button to give yourself 50 billion tokens on the Excel spreadsheet, which is called a blockchain. It's just as easy to type 50 billion as it is to type 0, and so people just type 50 billion in. Like, now we have that much.
Yeah. I remember when that was the innovation. It was like, what about unit bias? These coins should have 50 trillion.
Yeah.
And then it's like, people enjoy buying 20 million of something instead of buying like 2 or 0.1. That was like, I think that was 2020 or 2021. People caught on to this idea of unit bias. It was a fun time.
It's all just zeros and
in
ones.
The
computer
doesn't
care.
change anything. Yeah.
Whether it's 50 billion or 0.
Like Anna could have started trading at a penny.
It could have, yeah. But the important thing is it started trading with 0 in anybody's pockets. That the first of these that ever existed was paid for, and the last one that's ever made will be paid for. That is not a good business model. And this goes back to the difference between protocols and companies. A protocol exists to be a public good. Protocols don't make profit. Like, what company runs HTTP? It's not a company. It's a protocol. It's a way to get computers talking to each other. And the people who designed HTTP, I don't know who they are. I don't know where they are.
I've read about them once, but I don't remember their names.
I can't imagine that they made a penny from HTTP.
No one will remember that name. Yeah. It's not going to be on.
That's what protocols are. And Bitcoin would have been that way if it didn't, catch on. It's just a protocol, and it just exists. And then people take over. But virtually everything since then has been in this mindset of being a company. It's modeled after this Silicon Valley kind of a pseudo-Western equity structure where you're going to put work into something. It should be valued in the market, and you own a share of this. And by the way, so do your investors, and they need their kickback. And so value gets created like stock. Virtually all crypto companies are modeled after the stock company, which is a perfectly fine model. But there's the answer why you don't see much of this, because we all just live in the milieu that we do, where companies have tradable shares. And so most crypto projects just take their cues from that.
Yeah, that's a weird dichotomy we've been into, where companies will raise by selling equity, but then they'll launch a token. And then they have 2 mouths to feed, and usually the equity buyers get tokens too, but they sell them, and then they're just equity holders now. And where do you drive value?
No.
I'm going to drive value to the equity holders. Token holders get left out to dry, and we're seeing more and more of that come to light, where now it's like, if you're not generating revenue and driving it back to your token, either through a buyback or some kind of something, there has to be an interaction there. And the revenue meta that has emerged here, which I find funny because it's kind of the whole game. And at a certain point, speculation dries up. I don't know if speculation is gone forever, but it is certainly getting a lot smarter. 2017, it was like, I don't even want to read the white paper. And by the way, there's only a white paper. There's a white paper and there's a token. That's the whole product. And most of them never made it past white paper phase. And these things were marking up hundreds of X. And now we're at a point where, like, revenue generating companies that don't necessarily support their token, like, everything's kind of getting washed out.
Yeah.
And so there's this real question right now hanging in the air, which is, where's the value? What is value? People are starting to do more research. They're like, I better dig into this because it's mostly bullshit, which is not news. I think everyone, even people that were excited about crypto and excited, bullish, whatever, everyone agreed. It's like 99% of these will fail. They're failing. They're failing at an astounding rate. And there's some really good teams out there that are still struggling to drive value. Even some that have, like, I'll pick on Brave Browser here. Brave Browser has something crazy, like 60 million monthly active users. Their token not reflecting what you would think from something like that. And so there are examples of very successful companies, very successful products. They're getting a lot of usage. And so it's like, how can we tie value and liquidity back? So
here's the thing. when you see these companies, these projects, and they provide a service, like maybe there's a fully on-chain bank where you have like deposits and credit and borrower interest, great service. And you release a token, and the question is always like, do you need a token? Did you need to do that? Yeah. The two mouths to feed. Nirvana doesn't need a token. It just is a token.
Yeah.
Kind of like Bitcoin. Bitcoin doesn't need a token either. That's what it is.
It's a coin. Yeah.
It's a unit of account. It's a cryptocurrency. Nirvana is currency is not the technical word for this. It's an asset. That is it. It's a closed loop. There's not this extra appendage of a token for extraneous reasons like paying off investors
community engagement or whatever.
Yeah. It just is that.
It's the whole thing.
The purpose of Nirvana isn't the same kind of purpose that a company has. It is to be paradigmatic of what crypto ought to be. It's to save crypto. It's to become what crypto was meant to be from the beginning. Now, you can have two kinds of assets. One, which is Bitcoin, which is not at all based on fiat, not at all based on the legacy conventional world that we built with finance at all. And Bitcoin's based on scarcity, and it's based on mining, and it's a beautiful system. And then there's the ANA asset, which starts on a different foundation. ANA is not concerned with scarcity. ANA is not concerned with escaping from the rest of the world and creating this parallel track. It's very much rooted in the real world, but it is focused on value itself. It's a different kind of asset than Bitcoin, but with the same aspirations. Yeah. That this is a cryptoification of what we have seen. How can we improve it? Which is to say, how can we make it transparent, algorithmic, procedural,
well, it's reliable? Like the win with Bitcoin at its core was like removing humans. Which parts of this finance system can we take the humans out of because they're not trustworthy? At the highest levels and over time, they will not make decisions for the greater good, whether it's monetary policy, transfer of value. Bitcoin did a fantastic job of that. Beautiful algorithm.
They removed all the humans.
From those two particular pieces, right? From the transfer value and the monetary policy. And so we, again, taking it a step further, removing humans even from the trading of it, the market making of it, the underlying value, the minimum value, and then the credit market. A lot of times when I ask people, I tell people about the interest-free, liquidation-free credit, they say, who's lending at interest-free? They say, who am I borrowing from? I was like, you're borrowing from human. You're borrowing from the protocol because at that floor value, below that, the protocol owns all that liquidity and it's accessible to anyone who wants it. But in the meantime, it can be lent out for a borrow fee that benefits everybody. And there's no need for interest because it's a protocol. It doesn't care.
Yeah. Think of it like this.
That's a mind fuck for a lot of people. They're just like, no interest? That sounds crazy. You could charge interest. That's the funny thing. You could have interest on it. You could have built it where you're like, it's a governable interest rate. And that's more revenue for everyone. And maybe it's still a good product. But the choice you made a choice, obviously, intentionally to have zero interest. I've never asked you why.
Well, it serves
what was your thinking?
It serves no purpose. Interest exists because you got to pay somebody off.
To incentivize the lend.
You have to incentivize a human. Protocols don't need an incentive. Humans need incentives. HTTP doesn't need an incentive to be HTTP. The whole reason Bitcoin dilutes, the reason it prints more of these things is an incentive for the humans to
run
mine
the machines.
it. Now, there are places where humans gear in to Nirvana where they need an incentive in order to participate and strengthen the network. But it's not with lending. So you don't have to charge interest. And if you don't have to do it, don't do it. It doesn't matter.
Keep it simple.
The second reason, which is less philosophical, is that one of the great joys of credit on Nirvana is that you're never going to be margin called. There's never going to be a moment where like, oh goodness, it's Tuesday, I have to pay my monthly interest, or else they're going to close my account out. If you were charging interest
eventually,
Yeah, it'll
liquidation could happen.
Yeah. There's no other way to do it. So it's those two things combined. One, the whole apparatus of interest payments, that idea that if you borrow money, you're borrowing it from someone, you need to pay them for the opportunity cost that they're taking on. It ain't there. So get rid of that unnecessary appendage. And second, it's just nicer to never be margin called. It's nicer to be able to borrow and throw your laptop in the ocean and never have to think about it again.
In brief, how does Nirvana store value? Quite literally stores it. How?
This is the difference between paper gains and actual gains. The value of something is what you can sell it for. Lots of things have a price. When you come to sell, you'll learn how much value that it really has. And value should be scaling. If you have a whole bunch of euros, if you have €1 billion or 100 euros, it should be worth about the same amount. You should be able to move €1 billion just as easily as you can move 1 million. That is always a question of liquidity, isn't it? So most crypto tokens, and by most, I mean there are hundreds of thousands of these, have an issue with being able to sell at size. Who are you selling to? The way Nirvana stores value is that who you are selling to isn't another person who has to show up at the desk that day, but it is a protocol itself. All value is, at the end of the day, is that there's liquidity to absorb it. All it is that there is a bid, that there's money that you can sell into without pushing the price down. A true store of value is something that you can sell and the price doesn't go down at all. How do you do that? A protocol creates a buy wall, so to speak, a bid at sufficient size to buy every token back at the same price. That's really all it is. The floor price that catches all the headlines with Nirvana, at the end of the day, is just a bid for every token that exists at a price. The reason the protocol is able to give that bid is that the protocol has the money for it. The protocol is the open interest buying the token, and it's always buying the token. It's always putting that bid there. Where does this money come from? The people who buy an AVM token. When you buy an AVM token, you're buying it, once again, from the protocol. You give your money to the protocol gives you the token. In exchange for that, you're carrying this thing on the way up, you're exposed to it, you hold it, and the protocol has the money. That's what fills the bid for that buy wall. Storing value almost always is not under the purview of blockchains or tokens. A token doesn't store value, it has a value. The store of the value is quite often, well, in the case of Bitcoin, the store of value is someone like, say, Michael Saylor, who is buying it. Because what gives something value is the bidder. We all know this. All Nirvana's doing is making the bid a program. The program is bidding, not another person. So value and liquidity are properties of the ANA token itself. Every ANA token, in a strange grand unification of finance, the token itself has liquidity in it as an essential property. In the past, everything has worked this way. There's a split, there's a chasm. You have shares of a company, you have assets, you have a Rolex, and then there's a market for it. The liquidity in the market is in no way connected to the shares of the company. These are two separate things that come from two different places. Nirvana just unifies that. The liquidity for the token, which is to say the value of the token, which is to say the floor price of the token, is included in every token that exists. Because the tokens come from a protocol, and the protocol holds the liquidity.
So, in extending from that, when you have an asset with those properties where there is an absolute minimum value that is protocol enforced, when you have those rules, and you know they're going to be followed algorithmically, you can do a lot in that region below floor price. And that's where the big unlocks happen with regards to benefits and sort of, okay, but why though? When people say, well, why though? It's like, well, have you ever heard of an interest-free loan?
Yeah.
A non-liquidatable loan, non-liquidatable leverage? These are things that don't really exist elsewhere. There's variations of them, non-liquidatable leveraged exposure. There's a lot happening on the back end with those that do include, leverage on other platforms. And so, I always find it funny when it's like, there's non-liquidatable leverage. And then deep in the docs, you see mention of a circuit breaker. You're like, we have all of these boundaries, but in the worst case, guys, it's okay. We have a circuit breaker. And it's like, well, that sounds liquidatable. Like, it sounds like there is a scenario where that might happen. And when you have this closed loop lending right within the protocol itself with Nirvana, and it can't trade a tick below, the math just doesn't allow it. And you don't even have a liquidation engine built into Nirvana. It doesn't exist. I'm sure there's a great analogy we could pull there. But the idea is, when you have non-liquidatable leverage and lending and interest-free credit, that's a fantastic value prop. It's something that is entirely dependent on a model like this.
Yeah.
And for me, that's my favorite unlock, especially living in a country where debt is not a taxable form of income, if you will. You say, okay, I have this new money that's arrived in my bank account, and I either earned it from income or I earned it from the sale of something that was in profit. There's a capital gain. But if I have a debt on my balance sheet that offsets that, it's no longer taxable. And so the buy, borrow, and die strategy, which is like the classic, since the 1930s in the US, where people are pretty mad about it. The more they learn about it, they're saying, hey, these billionaires, they're not paying any taxes. It's like, well, how are they not paying taxes? Well, they're not selling their assets. They're not triggering capital gains. They're finding a bank, a lender who will hold on to their Apple stock or their Tesla stock, and they'll give them cash against it, and they'll charge them interest. And of course, if those assets crash in value, they may get a margin call, they may get liquidated. That's a taxable event. But the idea is they're living so deep below their liquidation level. They're millionaires. And they live through this type of system where they're not playing the game at the same level as everybody else. They're getting this special access to this way of living. And with Nirvana, that way of living, depending on what country you're in, is now accessible the same way where, bank the unbanked. It's like, well, let's offer, debt instruments to anybody who wants them in a really friendly way. It's not the first time somebody in crypto found a way to exit their position through a borrow, right? We mentioned Aave earlier, but that's going to come with 6 to 8 interest rate per year, and also margin calls. Every time ETH crashes, you see the on-chain sleuths looking and saying, hey, this position on MakerDAI is going to get liquidated for $125 million. Oh, look, they just upped their margin. It's very stressful. And so what we can do here with this product and these offerings is remove the stress from that strategy while offering it to anybody who wants it.
It's a pretty interesting feature. At the end of the day, the periodic table of financial services only has 3 elements. It's deposits, exchanging, and borrowing. That's it. Pretty much anything you see in finance just comes from a combination of those 3. And Nirvana has all 3 in a unique Nirvana way. Essentially, all Nirvana is the problem of value itself, which is the problem of liquidity, value just being what you can sell it for. And so liquidity is the question always about what something is worth. And with Nirvana, liquidity is always allocated by a protocol to provide a floor price, which is to say you can buy back every token at exactly the same price. And this floor only goes up in one direction. It rises.
Yeah.
It only moves in one direction. The fact that you can borrow without interest, without worry of being margin called, is an add-on feature to that. Nirvana could have stopped there, which is just, it provides value, it provides liquidity, the floor ratchets up. But then came this idea, well, hold on one second. If Anna has a guaranteed minimum price, then this is a very unique sort of collateral, a collateral that can secure debt up to that minimum price, stress-free for everybody. You know that the collateral's never going to go beneath this price. Therefore, you can borrow up to that guaranteed floor price.
Comfortably.
Comfortably.
Yeah.
And it's never going to go upside down. You're never going to be underwater, insolvent. You're going to have
There's no
debt.
bad debt scenarios. There's no liquidation scenarios.
Yeah. And rather than hoping somebody else provides a brokerage service where you can find lenders to lend to on a collateral holders, the thought was just, well, we'll in-house it. We'll make it first party. Mm-hmm. And so the Nirvana protocol provides lending with zero interest because there are no human lenders. It's from the protocol. And zero liquidation risk because it just has a rule where you can only borrow up to the floor price.
EVM being the core innovation here, Nirvana being the first real test case of it, the mothership, all roads lead back to Anna. And you've always talked about, what's next? What's the next thing we could apply this tech to? How could we save other tokens from themselves or enhance other tokens? And so you've built a derivatives exchange called Samsara. And on Samsara, NAV tokens are the derivative. They're derivative of whatever their underlying asset is. Bonk gets a NAV Bonk, Bitcoin gets a NAV Bitcoin, Sol gets a NAV Sol. Talk to me about the NAV tokens. Where did this idea come from where you're thinking, okay, what's next? Derivatives exchange, what was the impetus there?
Yeah. Well, look, value is always quoted in terms of something else. You can, whenever you say something has a price, it has to be in terms of another thing. Whether that's euros, yen, Rolexes, wattage, you have to quote something in terms of a pair.
The Lambo calculator.
Yeah. And in Nirvana's case, it's just Occam's razor. Most of the world runs on dollars. It's the dominant reserve currency. Okay, that's a good way to quote the value of something. Let's just, if you can't beat them, join them. But that is ultimately arbitrary. If you zoom back wide enough, you can quote something in terms of Bitcoin. You can quote something in terms of Ethereum or Sol or a low market cap meme coin or an exotic derivative. All of these things are eligible candidates to hold value. Nirvana took the route of dollars that comprise the floor price, the buy wall. The bid that gives it a guaranteed value comes in terms of dollars. Why not extend that? Why not commodify it? Samsara is simply the application of Nirvana's engine to the entire panoply of digital assets. And just let the market do with that what it will. Let the market decide. It creates rising floor prices in terms of Bitcoin. It creates rising floor prices in terms of Sol, in terms of ETH, in terms of
Fartcoin.
Yeah, I know.
So whatever thing you hold value in, whatever thing you are bullish on, say, I think Bonk is going to go up 10x next year. I want to hold Bonk. And now I can take that Bonk and I can go to Samsara and I can mint NAV Bonk. Talk to me about the benefits. Why would someone do that? Why should someone do that?
Okay, so Samsara works exactly the same as Nirvana, that there is a floor price. Let's say it's quoted in terms of this Bonk token. Let's just say Bitcoin. It's quoted in terms of Bitcoin. And there is the price of the Samsara token, which is always at the floor or above. Mm-hmm. Again, quoted in terms of Bitcoin. If the price is at the floor and you are long Bitcoin, what's the rational thing to do in this case? If you buy the Samsara token, the NAV token, for Bitcoin at its floor price, you already want to hold Bitcoin, it can only amplify your returns. If you buy it at the floor, it cannot go down in terms of Bitcoin. Let's say the floor price is 1 BTC. You buy it at 1 BTC, it costs you 1 BTC. This token, although it free floats, it only free floats at the floor in one direction.
Yeah.
It will only amplify your returns. Tomorrow it could be worth 1.1, 1.2, 1.3, 1.4, or tomorrow it's worth 1.
And you change your mind and you say, I want my Bitcoin back, you can have it with no dilution or loss.
Let me put it...
When trading at the floor.
Yeah. If you buy it at the floor, it is guaranteed to outperform the underlying. buying NAV BTC at the floor will outperform Bitcoin.
Yeah.
If Bitcoin goes down 10% in US dollar value, yeah, your NAV BTC will go down 10%. If Bitcoin goes up 10%, it'll also go up 10%. But it will go up in its own terms also.
Yeah.
The floor will always outperform.
That's the
Bitcoin.
big unlock that really hit when we launched this demo last week. We did a break the floor campaign. You know, any protocol like this is only as strong as the belief in the protocol. And so one of the things we did is put out this challenge. We said, okay, guys, this is new, this is interesting. Come and try it. Come and break it. You know, we want to destroy as much value as we can to prove this AVM, this assured value machine, actually does have its downside limitations. And that's the real unlock here. So why not invite the whole world to come in and, hey, we'll give you 50K if you can break it. That's exciting. We'll try it. And so we minted for about 72 hours as much faucet tokens as we could to drive these NAV tokens to the moon. And some of the multiples hit 25x from their launch. Very cool. Now we're going to launch this break the floor campaign. We did a live stream. We said, hey, everybody, we're going to sell everything we can. We're going to manufacture a black swan, something that, you know, like you just said, at the floor, you can borrow the full amount you'd get from selling. So it is irrational to sell at the floor in a lot of cases. And so we essentially manufactured something that is worse than pretty much any scenario that would happen in real life. But we said, we want to do this. We want to try to destroy as much value as possible. And at the end of that experiment, the multiples from the day they launched were still kind of between 6 to 12x. In other words,
it did 12x the returns of Bitcoin,
yeah,
even with an orchestrated panic sell.
Yeah, and so, you know, NAV Bitcoin, NAV BTC starts trading at $1. The very first one available will sell for $1 worth of Bitcoin, and it'll trend up from there based on any more buying and selling. But that first one ever purchased cannot go down. It's the only one that exists. The person who has it could sell it back to themselves or back to the protocol. But the idea is when you lock in on that $1 starting point, the outside outperformance that you've listed on the homepage as the multiple, just to help really illustrate that the NAV token in general is kind of programmed to amplify exposure to the underlying, in this case Bitcoin, with a positive skew, right? It can go up infinity. There's nothing really stopping it. Market price will trade like any other asset. But as that's happening, whether it's fees being generated that go directly into it or from demand itself, liquidity entering the system, the AVM, reorganizing that, reallocating that to a floor region that people can borrow against, leverage against, or sell into if they ever need to. They decide, I want my Bitcoin back. It's up a bit, it's down a bit, or it's right where I left it. The protocol maintains that bid. And so just applying that to any SPL token on Solana.
And this was the lesson, is that even if everyone sold this derivative, it still outperformed the underlying.
Yeah.
Even if
like the worst
everybody sells, because the floor rose.
And that's the
value proposition.
Yeah, and the new feature that came out with this that is going to be retroactively applied to Nirvana is the fee to floor model, where essentially we've got a derivatives exchange that takes 25 plus or minus of its fees, because that's a governable parameter. 25% of the fee revenue that comes into this exchange goes directly into the NAV for whatever token that is. So NAV BTC has a floor value, and when I sell NAV BTC, a little bit of the fees from that sell go right into the floor. And so what we actually saw during this crash that we orchestrated was that the floors were rising during the sell-off. So anyone who wasn't selling had increased credit capacity. They certainly weren't liquidated. In fact, quite the opposite. They could lever up more. Yeah. And so you have this kind of return of PVE, where PvP has just been like, oh, okay, everybody get in, get out, get out, every man for themselves, because this thing's going to zero. And that's just been this mentality where, anytime something goes up a little bit, everyone either takes their chance to exit. And, it's just been this perpetual bear market, broadly speaking, for alts. There's pockets of outperformance, and there's innovations, and there's hype cycles, and there's some focus here one week or the other. But more and more people are realizing we just live in this world of PvP. Get what you can while you can, because soon it won't be there. And a big thing that I want to point out here is that when you have an exchange or a venue or derivatives platform that takes some of that fee revenue and just puts it right back into the bottom line for all the assets, that is the closest we're ever going to see to the return of a PvE environment where I can trade these things, I can hold these things, I can access liquidity against it. But I know that all of the business that's taking place is just lifting every boat in the ocean.
That's true. This is possible when you make the algorithm the center. Your counterparty is an algorithm, is a program, and the program's not out to get you. The program's not out to make a buck. Virtually all markets work like this. There's a buyer, there's a seller, and then there's this ghostly third party in the middle, which is the brokerage, the market maker, the exchange.
The desk.
And they need to pay themselves to render their service. What happens if you remove two legs of that stool and you just have a buyer who's interacting with a protocol and a seller who's interacting with a protocol, and there's no market maker who also needs to get a cut? So yes, there are fees on the Nirvana platform, but the fees are not to pay off a third party who's just leeching off of other people's trades. The fees are to pay the traders. The fees don't need to go anywhere else because there's nobody with an open mouth and an open hand who needs to be paid off. When you remove the market makers and you just have an algorithmic market, all of that money can go right back into the system. Yeah. Which is, as you said, investing into the floor price, lifting or direct revenue share to token holders.
Yeah, the Prana token holders. And so, again, it almost sounds like going back to what you said about Bitcoin took a huge step. This taking the next step. One of the reasons you can transfer Bitcoin anywhere in the world very quickly for very cheap is that there's no human in the middle that has to get paid. If I send you $50 on Western Union across the world, there's probably 3 to 5 banks that touch that. And each one of them has electricity bills and oversight and regulatory bills and humans that they have to pay to stamp and sign off. And mistakes happen and people take weekends off. And so just program away from that. Now you have a protocol at the middle. And hey, go figure, it's a generous protocol. It doesn't need to make an income. It can deliver that value into the floor, deliver that value to stakers.
It grinds my gears, man, that the real PvP in crypto that we lament is not the one that we think it is. It's not buyers and sellers duking it out. You're actually up against market makers, and they're nowhere to be seen. That is a sad state of affairs where who you're trading against is a market maker that doesn't have your interest in mind. That's the main thing that Nirvana's AVM gets rid of. We don't need them anymore. Just as Bitcoin said, we don't need people notarizing your ACH transfers. We can just have the ledger be the ledger. Nirvana's saying we can have the market just be a market, a pure market, buyers and sellers, and not somebody in the middle.
And finally now, for the first time, we're going to take that and apply it to other tokens.
Yep.
And so every asset listed on Samsara now is just an amplified, higher version of the base asset, where if I'd like to hold one of these things, I think long-term it can accrue more value. I'd rather hold this amplification derivative that has a positive skew. And the positive skew thing really excites me because there's a lot of talk right now of amplification of exposure, but it's always bidirectional, right? I'm 3x long this asset. I'm also 3x long this asset if it moves down. And on the back end of these leverage tokens, one of the examples that I'm talking about, these derivatives, which personally I like them, I hold some of them. It's a nice simple way to gain some leverage in the system, and I accept that downside risk. But it's actually slightly worse on the downside. If it's 3x long, it's like 3.1x in the other direction, because on the back end, the way they maintain this leverage in the system is with rebalancing. And that rebalancing has a decay effect that, even though it's been improved greatly over the years, it's still there. Whereas NAV tokens, they introduce this amplification of exposure that doesn't tie directly to a specific leverage, but the nature of the NAV floor that can only outperform the underlying asset. It can be neutral or it can tick higher. It cannot tick lower. And so you have this bounded downside effect and this unbounded upside effect.
Yeah.
Positive skew amplification.
Well, look, there are nations, there's sovereign wealth funds, there are institutions that just want to acquire Bitcoin, that it's going to be this reserve asset, you stockpile it, you hold it. More power to them. Godspeed on that. And there have been some companies that have emerged that offer that service. To say, you want to stockpile Bitcoin. Well, all you care about is just increasing your holdings of this. Let's give you an instrument, a vehicle, so you can amplify that, on easy mode. And these companies go by the name of digital asset treasuries, of which...
DATCOs.
Yeah, MicroStrategy is a very famous example of this. It's a good idea. And the only issue with DATCOs is that they are codes. They are not protocols. And companies are run by people who change their mind, every quarter, and they have pressure from shareholders. Will Michael Saylor sell the Bitcoin in order to defend the stock price of his company? That's only for him to decide. Samsara is doing almost identically the same pattern
playbook,
that a DATCO is doing, which is you want to amplify your exposure to this digital asset. Here's an instrument that makes that easy and possible. But it's just doing it algorithmically. It's taking the humans out of the loop. The floor price of a Samsara market is essentially just the balance sheet of a DATCO. It's just how much Bitcoin is in this thing. What is the redemption value of your share in terms of Bitcoin? Mm-hmm. And what Samsara does is engineers that this NAV can only go in one direction. It can only go up. It is literally impossible for somebody to decrease the NAV price, which is just not the case with DATCOs.
If 100%, or let's say 50% of the NAV Bitcoin holders change their mind, they say, I've got this new thing I want to do, or I don't like Bitcoin anymore, and they sell and they sell and they sell, it hits the floor and they can sell and redeem halfway down, all the way. Anyone who does not change their mind, their bottom line is protected, the NAV is maintained, cannot trade below NAV, always at or above in premium town. And so I do think that the on-chain DAT is a really nice analogy, a nice parallel to draw here.
It makes them obsolete.
Yeah.
In just the same way that a stable coin makes ACH pretty obsolete. If you wanted to move $100,000 from here to France, I bet you the fastest way to do it is by transferring some Tether or USDC. Yeah. It makes that obsolete.
You can get it done before you get the ground floor to the bank. Yeah.
Samsara makes DATCOs obsolete. Here's the idea. You just want to stockpile. This is just a better way, no matter how you look at it.
Not to mention the operational costs,
which are zero.
Which, if I want to set up a DAT today for ANA or for whatever asset, to say a Solana DAT, where do I start? I'm going to go downtown. I'm going to meet with some people. There's a lot of paperwork. There's all this and that. And then a few months later, I'm going to probably sell a bunch of shares in advance at a really nice price. And a few months later, it's going to launch. We're going to announce that, hey, these shares that have been sitting quietly off to the side with a totally random name, well, we bought a controlling share and now it's a DATCO. And we've raised money by selling those shares privately to buy our first tranche of Solana in this case. And so, the news comes out, it's like, oh, nice. And people buy those shares. And who's selling the shares? On that rally, all that pre-sale shares that have hit the market, and then there's vesting. And so we see this very repeatable pattern in the equities associated with these DATCOs.
Yeah, it's like life imitating art.
Yeah. And I'm optimistic that they're not dead. I think a lot of these DATs can survive and thrive and come back and achieve, premiums, and I think a handful of them will. But now, again, just democratizing that process, putting it on chain, this is now primitive. It's the plumbing needed for anyone to launch a better version of a DATCO on chain. But again, is this the easy way to do it? I think there's an attraction for some people. They say, I actually want to go and pre-sale a bunch of shares and make a ton of money on the launch.
Absolutely.
So this is going to present a purer way to do it.
A crypto way.
A more honest way, a transparent way. Yeah.
It's fine. It's fine. Here's the world that I want to see, where crypto is crypto, conventional finance is conventional finance. Stop with the cross-pollination. Do things, if it's crypto, do it a crypto way. If it's traditional finance, do it a traditional finance way. Let people choose. They each have their perks. Mm-hmm. I'm not saying that trustless, algorithmic, permanent systems are the best for all cases. There are obvious shortcomings with that. Sometimes human intervention is very helpful. Yeah. But let crypto be crypto. Let Wall Street be Wall Street. They don't need to mix. You'll have MicroStrategy, or strategy as it's called now, and there'll be Samsara, and they're different paradigms that are accomplishing the same thing.
You're not alone in that. There's a growing pushback against this the Wall Street takeover. And for a period of time, it was like, hey, Wall Street's here. This is great. They're going to pump our bags. And I think there's a certain group, a certain cohort, particularly in the OG community. We're seeing some exits on the Bitcoin side, where I think there's this kind of growing fear that it's just been consumed by traditional finance and will essentially get regulated and just become
its motivation.
Yeah, it just becomes a new version of the thing that was initially set out to get away from. And I think that's one of the battle cries for Zcash right now, is that Zcash is taking off. People are kind of like, oh, let's go back to the cyberpunk route and the roots, and let's apply privacy in its purest form and all that. And hey, NavZEC is something that we'd like to launch now that it's quite liquid on Solana. There's a SPL token for Zcash.
We'll do that.
And maybe the first, well, actually there is one DAT out there right now, cyberpunk stock, but could be done.
I'm a crypto conservative, I guess you could say, where I just want to conserve the principles. I want to go back to the roots. This was an idea, and I don't think there are that many of them. A lot of people are crypto progressives, which is like, let's keep changing things and work with the times. These projects are very much in line with the founding ideas of this, the project, of crypto,
the purity of it. And I don't think anyone's going to mind the bells and whistles that you've added here for Samsara with regards to PVE and bringing that value that's generated on the platform and just delivering it right back to every token holder through direct fee to floor mechanisms. And so Samsara that we just talked about really marks the first of the expansion, right? We're taking this AVM, it's been proven out with Nirvana. It's there, it's in the wild, it works. We take Samsara. Let's apply that to every SPL token on Solana. And there's going to be revenue there. There's going to be platform revenue, there's going to be protocol revenue. And as we discussed, the protocol revenue stays with the protocol, goes into the NAV, Prana stakers can have some. That platform revenue, 100% of it going back to buy the ANA token. Because we feel very strongly that the ANA token is the best treasury asset you could have. Not only does it have its bounded downside, uncapped upside, but it gives you access to liquidation interest-free credit. And so if I hold ANA in my treasury, at any moment, even that exact moment, I could just borrow USDC against it. I don't have to worry about that position being liquidated. I'm not paying ongoing interest, but I still maintain any potential upside of that. And that gets a really interesting story. It becomes very interesting when you see something like Samsara saying, we're going to take all of this revenue over time, continuously, and drive that value back home to ANA. And now you've taken the AVM model, that layer, that SaaS layer, software as a service, and you've opened it up to other teams. And right now there's 5 teams, one of them who's already launched with Xenon. We've got GLGL, we've got Syndicate, we've got Starbase, we've got Rise, all building their own version of a front end, a launch pad, launching various assets, whether it's creator tokens, gaming tokens, meme coins, permissioned Web2 startup tokens. And 15% of all the fees that generates in perpetuity will go directly back to our treasury, which we use to buy ANA over time. And that's the cost of doing business. You maintain the code, you upkeep the servers, the network, everything that runs these AVMs for those teams. That's your payment. 15% comes back. We convert it into ANA. One of those launch pads so far has also committed to taking their revenue once they're well capitalized. Day one, if they make 100K, they probably need that for growth. But very early on in their life cycle, once they're feeling like, okay, our runway's secure, they're going to take 100% of their revenue as well. And so what you get is you get multiple revenue generating engines that are all driving their revenue back to ANA. Now, if they have a quiet week and Samsara is humming, their bottom line increases because Samsara is lifting ANA off the market, and vice versa. It becomes a nice compounding flywheel. And one of the things we talked about this week is we're talking to teams here at Breakpoint, and there's a lot of them that are pre-token, post-revenue, and I'm chatting with them and then saying like, are you guys planning a token? They're like, well, maybe we'll do it. And they're already fretting all of the issues that come with that. How do we distribute it? Where do we put it out there? Where's the liquidity going to come from? Who do we have to pay off? How are we going to maintain that? And of course, the issue is, if you're going to launch that token, presumably it's to use your revenue to buy it back. That is the real and only way to connect the growth and success of your platform to the token, such that you can lift your community. And so I asked them this question. I said, do you want to be the only one buying your token? because you're going to have X amount of revenue, you're going to have holders, and you're the only bid in that market? Or do you want to commit and sort of join this Nirvana alliance where you then commit your revenue to this ANA token, your treasury grows in ANA, your staked ANA is earning Prana that you can airdrop and distribute to your community. You could even add a Prana staking portal to your platform so that your community could engage and enjoy the lift that you're putting into the market. You don't have to go and do all of these other bells and whistles with your own token, which of course, again, lives entirely dependent on your revenue. You could benefit from the revenue of every other team that makes a similar commitment. And so that's really the next big phase for us as we head into 2026 is, first of all, proving out the model where we have Samsara launching, Rise, and a handful of other AVM teams, all putting that bid on ANA. And as it starts to lift and move and people start to understand how this works and realize the power of non-liquidatable interest-free credit long-term, then they think, okay, I can either launch my own token and live on this island where only our revenue goes into that token and we have to lift the entire token supply for every holder, or we could forego launching our own token, align with this Nirvana model, commit our revenue to that token, and engage with the Prana as far as like engaging our community and driving that incentive home. Because, you know, one of the things tokens do great is they form communities.
The biggest headwind for crypto is that it has this, frankly, deserved reputation of being a bit of a grift. Mm. In the popular mind, just ask 10 people, you know, what do you think about it? It's just a bunch of pump and dumps. The way Nirvana grows the pie for everyone is by changing the paradigm entirely. It's the end of that era that in the near future we'll come to expect that price charts have 2 lines on them. And we'll see an asset that doesn't have 2 lines as old-fashioned.
You mean that could go to 0 tomorrow?
Yeah. It's distasteful to launch any other way. As we're opening up the AVM as a platform that anybody can build on and have 2 lines in their price chart, the mood is going to change in crypto. Yeah. It'll no longer be this malaise of feeling like at any minute some insider could trigger a guillotine, which then, you know, chops off all the paper gains that I had. We can move past that era and give crypto an entirely different feeling about it. There's something that it's reminiscent of the decentralization dream. The dream that no individual has any say about what you have.
No final say, yeah.
Now no individual has any say about what you have is worth. And that's represented by that ratcheting up floor line in all of these projects that are launching on this platform. It's a completely different mood for digital assets. So the goal of ANA 4 years ago, when it was designed, was to be a global scale reserve asset, like a dollar. And this is to say that it's something that you can park small amounts of money in it, or you can park enormous amounts of money in it. What makes it useful as a reserve asset is that it's scalable. Mm. You can't scale just anything. If supply is fixed or if liquidity is thin, it ain't going to work if some nation wants to buy $20 billion of just anything. You need to have scalability built into it. So ANA was designed from this exercise of, if you were to create the best global scale reserve asset, what would it look like? And now what we're seeing as people are adopting this platform is that they are going to use it as their treasury asset. They are going to use it to park their wealth in and watch their wealth grow.
And the more that do that, the more it grows for each other person. And I think that's the real unlock here that we're just in the first inning of as these platforms come to market. The dream was to be global reserve currency store of value. Yeah. And that has to start somewhere. And so Samsara going live is step 1. Rise and a handful of other launch pads is step 2. The assets that come out of those will feed back into them, feeding back into this. And so the ecosystem is just being born.
Yeah.
The protocol has been live. The ecosystem is just coming to life.
Hey, it took Bitcoin many, many years
Yeah.
to become what it is
Well,
today.
what are we, 15 years in now? Yeah.
17, I think.
17, 2008? Yeah.
Yeah,
Wow.
it's in its angsty teenage years right now.
So we're like just about to toddle.
Yeah.
We're heading in.
I got into crypto because I heard about digital gold. You know, you can't email an ounce of gold to somebody, but you can email Bitcoin. Ana's designed to be digital gold also, but better because not even gold has a floor price built into it.
Yeah. Native
Yeah.
credit, native leverage, all that stuff.